Good morning, Facebook. I'm so happy to say hello and good morning. I'm here with Jason Jean.
Hi, guys.
Jason Jean is here to speak to us today about questions you should be asking your mortgage lender. Jason, would you tell me a little bit about yourself and your company?
Sure can. I know I don't want to bore you guys too much, but I'm a mortgage broker out of Agawam. And our company is called Homestead Mortgage. I run a team called the Jean Group, so we have a whole team of professionals. And we really kind of just work with people to help them buy homes. We do some refinancing also, but primarily we're helping people buy homes in our area.
Excellent. And so am I, Fallon Saldo with
right.
Keller Williams Realty here in downtown Northampton. And as I said, I'll be talking to Jason Jean about questions you should ask a mortgage lender. So let's start. Jason, what is an interest rate?
Well, I think like when what you need to ask your mortgage lender, your mortgage broker, whoever you're going to be using for a mortgage or when you're shopping around, interest rates are not set by any particular mortgage program. So some people think, especially like I hear it with VA loans, with veterans loans. I think we talked about that last time actually.
Yes.
But like different banks have different interest rates. So that's like why you might work with one lender over another. I will also say price is not everything. So whenever I buy anything, I don't typically buy the cheapest thing I can find.
Yes.
Because generally speaking, it's going to break next week, and then I'm going to have to buy something else to replace it. It's going to cost me more money.
Yes.
Kind of weird analogy, but that's going to happen with more.
So quality over quantity.
Quality over quantity.
Yep.
So you try to find someone who's kind of middle of the road. Maybe service is a huge piece. Are they going to call you back?
Yes.
That kind of stuff.
Yes.
Are they going to get the job done? Are they going to say what they're going to do? Are they giving you a conservative quote, or are they giving you like best case scenario, and it's probably not going to be that?
So why is it important for a person to ask a mortgage lender about interest rate? What would be the importance for them?
Well, I mean, some banks and mortgage companies are just higher than everybody else.
Okay.
And there's no reason for it. They're
Got it.
making way more money than they should.
Okay.
So if you're not shopping at least a little bit,
yes.
Then you're probably doing yourself a disservice. But
Okay.
again, when you're shopping, understand like if that lender or broker has been good and responsive up to that point, don't leave them for 1/8%, because not everybody is good. And actually, I would say a lot of people in the lending industry are not good, and Fallon can probably attest to that.
There are some hiccups in any business. There's hiccups. You have to find someone. The relationship that you build is important, because relationships are what kind of steam business forward. The second question: what is the monthly mortgage payment? Why is it important for people to ask you about the monthly mortgage payment?
Well, it's funny because I said, when we say, hey, what are you looking for? And they always go, we're looking for a house that's $250 or $350 or $450 or whatever it is. They don't even know what the payment is associated with that. So like what we typically will ask before we get to that point is, what do you feel comfortable spending on a monthly basis?
Okay.
And then back that up, because sometimes, I was talking to somebody today. She's like, I was told I can get pre-approved for $500, and I was going to get a pre-approval letter for $500. She's like, but I don't want to spend that.
Yes.
So we want to make sure other lenders or whatever, make sure they're focused on what your payment's going to be, because that's what you're going to pay every month.
Yeah.
You're not going to pay $400. You're going to pay $2,000 a month, or $2,500 a month, or $1,200 a month, whatever you're comfortable with and whatever you qualify for. So that payment is extremely important.
I had a buyer last week say that, I could afford a house at such and such price, but I'd be eating ramen for breakfast, lunch, and dinner.
Right.
So you have to consider that. Consider that as an issue.
Yep.
Is a mortgage a fixed rate or an ARM? What does that mean?
An ARM is an adjustable rate mortgage. So typically most ARMs will have a fixed rate period. And so that's where you'll have like a 1-1 or a 3-1 or a 5-1, 7-1, 10-1 ARM. And so a 10-1 ARM is fixed for 10 years. And then every year after that, it will adjust.
Okay.
And then you'll have caps on it. Now, in most real estate transactions, you go to like a mortgage lender, mortgage broker, whatever. These days we're doing so much more in the fixed rate arena.
Okay.
Partly because I think so many people lost their homes with the adjustable rates back in the day, so a lot of people are scared. Doesn't mean that it's a bad thing to do. I know a lot of the local banks will be a little bit more attracted to the adjustable rate mortgages. So it really depends on really what your goals are. Are you going to sell this house in 3 years? In which case you could get a lower interest rate on a 3 or a 5-1 ARM, but just be aware that there is risk associated with that, especially today with a rising rate environment. You know, that rate could, you know, okay, maybe it starts out at 3.75 today, but next, you know, in 3 years, it could be 5.75.
Yes.
And then in 4, it could be 6.75. So you have to just really understand what the risks are and you know,
yes, and at that point, that monthly mortgage payment that you were judging your life around has now increased based on the fact that the interest rate has increased.
Yeah.
So you have to adjust your lifestyle as well and be prepared to do so.
Absolutely.
What fees do I have to pay? What fees would someone have to pay with a mortgage?
Yeah, so like obviously there's, you know, down payment is the biggest thing. So a lot of people think that down payment is really all there is, but not the case. The government has made it so difficult to get financing, and they have all of these layers of things that we have to do, and all these people that have to do work, and all those people get paid. So, you know, you're going to have like attorney fees, title insurance, you know, additional closing costs, like your appraisal. Most of the time you'll have an appraisal, although we're starting to see appraisal waivers come in where we don't have that anymore.
Yes.
So it's awesome. So there's a whole slew of closing costs, and really the only things that a good lender or broker is not going to disclose to you is whether or not there's any oil in the tank. Right?
Okay.
Because I don't know if you even have oil. You might have gas or whatever, but that's just generally not something that gets added on later at closing that your lender may have not talked about. And then just any home inspection. Most of the time, a home inspection is not required.
Okay.
So therefore, it's an elective thing. If you want to do it, go ahead and get your home inspection. Those
Yes.
can range what? $500
$400 to $600 depending on a single family and the size of the single family.
Yep. So we recommend that you get them every single time.
Yes.
But at the same time, that's elective. Other than that, everything should be disclosed to your, you know, from your mortgage broker or lender. On top of your closing costs, you also have what are called prepaid expenses. And I know a lot of times different banks will say, oh, here, my closing costs are $3,000. It's like, okay, great. So now the buyer thinks it's going to be an extra $3,000 on top of their down payment. But what they didn't disclose is when you're escrowing your taxes and insurance, that could be like another $2 or $3 grand, especially if you're in Connecticut, where most towns escrow their, you know, pay their taxes biannually.
And escrowing means you're putting them in an account for the next fiscal year to pay your taxes.
Exactly.
Okay.
Exactly. So they go into an account. So that way you just make your mortgage payment and your taxes and insurance are paid.
Yeah.
But in order to get those going, get that started, you got to throw a bunch of money in the bank or prepay them up front.
Yes.
And so that could be $2,000, $3,000 or more depending on the sale price and where you're living. So you'd want to make sure that any and all costs include any potential prepaids and any closing costs.
Yes.
And then certain loans like your FHA, your VA, your USDA loans, government-backed loans, most of the time, unless you're a disabled veteran, have like an upfront funding fee. It's called different things. Guarantee fee, you know, funding fee, mortgage insurance premium, whatever it is, but that gets rolled into the loan. So technically that's a closing cost, but it's usually financed into the loan. So
when you're sitting with your mortgage lender, as you're understanding, if you're just tuning in, I'm Fallon Saldo with Keller Williams Realty, and this is Jason Jean.
Hello.
We're talking about mortgages and questions that you should ask your mortgage lender. And what we're saying is that it's important to understand the costs and the fees that need to be paid. So make sure you ask your specific lender, or you can always call Jason Jean to get all this accurate information. Another question, does the loan have any prepayment penalties? What does that mean?
So prepayment penalties used to be way more popular than they are today. Good thing to ask, you know, but most of the time, like if you're purchasing a primary residence, most states, it's illegal now. So you're really not going to have that.
And prepayment means to pay off the mortgage before the end of the term?
Yeah, so like usually they'll have like a 3-year prepay. So like if you refinance your loan and pay it off, or if you sell your home and pay it off, within that 3-year period, there's a calculation that that they'll make that you'll have to like actually pay them closing costs, and sometimes it's in thousands of dollars.
And that's considered the penalty.
And that's the penalty of paying it off. Most of the time we see that in home equity lines of credit. So or HELOC.
Yeah.
But HELOCs prepays. Every bank's a little bit different, but generally most of the time it's if you close out the HELOC within 3 years, you just have to pay like whatever their costs were.
Okay.
That might be an appraisal, might be a title, title insurance or title exam or whatever, it's generally $500 under $1,000.
And I come across the next one a lot. What can I lock in the interest rate and points, and how much does this cost?
So when you get like a mortgage pre-approval and we say, hey, this is your ballpark estimate, go shopping for a home, and then it takes you two months to find a home, your rate's not locked in. That's why when they give you an interest rate at the time of pre-approval, banks change all the time.
Yes.
One day I could be beating this bank by a significant amount. The next day they could be beating me by an eighth of a percent or something. Banks fluctuate.
Because the market is living and breathing, just like in real estate.
Oh, every minute.
Yes.
Every minute. So you're not locked in until you actually are under agreement on a property, selected your home, or you helped you select your home, I should say.
Exactly.
And then offers accepted. You take the loan application. That's when you can lock in your loan. And you're usually locking in for 30 days, 45 days, 60 days, depending on when you're going to close. So if I'm going to close on May 30th, I only need a 15-day rate lock. Because it's cheaper. Generally speaking, it's cheaper with the shorter of the time it takes to close.
And think about that as well. If you have a closing that gets bumped out 2 months, that you may be paying $300 here, $600 there to keep locking in that rate for yourself.
Yep.
So sometimes that's just something to keep in mind.
Rate lock extensions. Nobody likes rate lock extensions, but sometimes they happen.
Yes.
Yeah.
It's one that I want to skip down. What is the minimum down payment required for this loan?
Yeah, so we do a ton of lower down payment stuff. So really, every loan program is a little bit different.
Yeah.
Your major loans, like a conventional loan, I think we still have a 1% down minimum required. Most lenders are at 3% down. And then if you're gonna, get into different types of home ownership, like I'm going to buy an investment property.
Yes.
I always recommend having 25% down on an investment property. Single family, I believe that you can do 15% down, but they get you on the interest rate, they get you on the fees. It's just honestly it's really just hugely beneficial to have 25%.
And that's a property that you're not residing in.
Yep.
That's what's considered an investment property.
Yep.
Do I have to pay mortgage insurance? That's a great question, wouldn't you say?
Yeah, absolutely.
Okay. Can you explain what that is? Why mortgage insurance?
Yeah, mortgage insurance really doesn't generally benefit the home buyer.
No.
Well, I guess it does in a sense. It allows them to put less than 20% down.
Yes.
But even on FHA, you put down 20%, you still pay PMI.
Wow.
So mortgage insurance is PMI.
Private mortgage insurance.
Yep. So you really just want to know all the facets of is that PMI being included in your mortgage payment?
Yeah.
Any good lender or broker is going to say, here's your ballpark payment. They're going to include the PMI. But I know for a fact different lenders have different rates of PMI.
Okay. So
let's say our interest rate is an eighth of a percent higher, but our overall payment is going to be lower because we have access to the cheapest PMI in the industry.
Okay.
So you got to look at what the PMI is and what's your overall payment.
Yes.
People get fixated on what's your interest rate, which is important, but at the same time, it really comes down to payment. What's your payment?
Yes, and doesn't the private mortgage insurance go away after you hit a certain amount, pay a certain amount of the mortgage?
Yeah, so typically if you have a conventional mortgage, PMI is going to drop off once you reach 78% loan to value.
Okay.
But if you reach 80% loan to value and you write them a letter, then they'll remove it, so you can save some money. So figure out what you bought it for, what that 80% mark is.
And your mortgage lender can answer that question for you very quickly.
But now I should state FHA, if you put less than 10% down on a 30-year mortgage, you're going to pay PMI for the life of the loan.
Wow.
That does not fall off. So when we're factoring in what's the better mortgage program, you got to factor in how long you're going to stay there, in that mortgage, and then,
yes,
the overall cost.
Do you have, the last question I think that anyone should ask, and it's important, is do you have mortgage products with lower rates that I qualify for?
Mortgage rates with lower, yeah. So if you're going to ask, one would hope that your mortgage broker or lender is going to say, here's the couple options that we feel as though you have. This is why this one's better. You want an advisor. You don't want, we cannot expect you who doesn't do mortgages for a living.
Yes.
To go, this is what I want, and be right.
Yes.
Sometimes you are, absolutely. But at the same time, like, you need someone who's going to make sure you don't make a mistake.
Yes.
And so that's a good question to say. Anything that has, is this the best program for me? Is this where I get the lowest rates and really the lowest payment? Those are very, very good questions.
You want to be an informed mortgagee, right? Mortgagee or mortgagor?
Mortgagor.
Mortgagor.
Yeah.
And, Jason, for anyone to get in touch with you, how can they do that?
We have our website is www.thegenegroup.com, and Gene is spelled like Jean, my last name.
Jean.
Like a pair of jeans without the S. And then just one thing, I saw a question too pop up.
Yeah. That
said, how do I buy a beach house? And actually, it's not that difficult. So it's 10% down is generally what we'll require
on a vacation home,
on a second home.
Oh, right on.
So yeah,
so beach houses are in the future, people.
Yeah, make it happen.
Contact us for beach houses. I also said we have a $20 gift card. Anthony Covell, if anyone knows Anthony Covell and he is watching, I will private message him. This is to Target, just as a thank you for liking my business page. I put everybody into a pool and we pick winners. So you have won the $20 Target gift card.
Congrats.
Jason, yes. Thank you so much for coming in. It's a pleasure as always.
Love being here.
Yes, and we appreciate you being here. If you have any questions for him, please contact him or private message me. Fallon Saldo, Keller Williams, Northampton. Take care.